Hello everyone. Today in this lecture we will discuss about MACD indicator. MACD is a technical indicator which is used to identify the moving averages that indicates a new trend, whether it is a bullish or bearish. After all, a top priority in trading is being able to find a trend, because that's where the money is made. The MACD indicator is special because it brings together momentum and trend in one indicator. This unique blend of trend and momentum can be applied to daily, weekly or monthly charts. The standard setting for MACD is the difference between the 12 period EMA and the 26 period EMA. So for a trader who is looking for more sensitive may try a shorter short-term moving average and a longer long-term moving average. A MACD with parameter 5, 35 and 5 is more sensitive than the MACD with 12, 26 and 9. So basically the trader or investor who is looking for less sensitivity may consider lengthening the moving average. A less sensitive MACD will still oscillate above or below zero, but the center line crossover and signal line crossover will be less frequent. The MACD is not particularly good for identifying overbought and oversold levels, even though it is possible to identify the levels that are historically overbought or oversold. During a sharp moves, the MACD can continue to overextend beyond its historical extremes. Now see here, the MACD crossing above zero is considered bullish, while crossing below zero is considered bearish. Secondly, when the MACD turns up from below zero, it is considered bullish. When it turns down from above zero, it is considered bearish. Now see on the Excel sheet, we use daily closing price for Reliance Industries from 1st Jan 2020 to 31st December 2020. So here the B is the column where we have the closing price of Reliance Industry. Now here in column C, the first value is simply a trailing 12-day average of the closing price. So from the next cell onwards, we will compute on the basis of EMA formula. Now essentially, today's EMA is a function of today's closing price and the yesterday's EMA. Now the formulas are entered. Next, we need to compute the 26-day EMA of the closing price. Again, the first value is simply an average of the last 26 days closing price with all the other values given by the above formula, with the time frame period equals to 26. Similarly, we are just computing the EMA as per the formula. Now let's move forward to column A, where we need to compute the MACD. Now the MACD is just simply the 12-day EMA minus 26-day EMA. Now we need to drag and drop down the formula to fill the cells. Next column, we need to calculate the signal line. This is a 9-day EMA of the MACD, and the first value is simply a 9-day trailing average, which means all the values given in these equations where the time period is 9. So this is the formula for signal, and we will compute according to the formula. Now the signal calculation should be look like this in Excel. From the second cell onwards, we need to drag and drop down the cell to fill the values in the column as per the formula. Finally, to calculate the histogram value, we just take the difference between the MACD and signal and then fill all the cell as per the formula. So as of now, we have calculated the MACD indicator. Thank you.